Welcome Lexington family, Frankie D'Antonio, founder and CEO here. In one of my last videos, I spoke to you guys about the 3 different types of real estate investors that there are out there. There's wholesalers, there's fix and flippers, and there are buy and hold investors. Today, I'm going to dive in a little bit more in depth in what a buy and hold investor is and some of their strategies in order to make money. Simple as that. All right, so a buy and hold investor. What is a buy and hold investor? So essentially, a buy and hold investor is going to be somebody who buys a property. It could be distressed, it could not be distressed, right? And then essentially what they're doing is they're then going to rent it out to somebody in their local community. And then they're either banking on one of 2 things, right? They're either going to be banking on cash flow or they're going to be banking on appreciation. But in this market, you cannot get both, right? So what is cash flow? Cash flow is this. I get a home, the mortgage is $2,000, I rent it out for $2,500, and then I make a $500 spread every month, and then I make $6 grand every year in cash flow, all right? That's what cash flow is. Now, what is appreciation? Appreciation is going to be banking on the fact that in 10 years from now, this home is going to be worth double, right? So in markets like Long Island and California, a $500,000 home today, in 10 years, I promise you, will be $1 million home, right? 20 years ago, homes in Long Island were $100,000. Those same homes are going for 6, 7, 8, 9, even $1 million now modern day, right? So the problem with real estate investing today and why a lot of people aren't going the buy and hold route and they're usually either wholesaling, fix and flipping, or just developing is because you can't get cash flow and appreciation evermore. Cash flow. Say for Long Island, for instance, you get a mortgage for $3,500, $4 grand on a $500,000, $600,000 home. What can you rent that home out for on Long Island? It's going to essentially be what your mortgage is. Maybe a few bucks more, maybe a few bucks less. So essentially these buy and hold investors are either losing money every single month or maybe making a few bucks. But if you think about it, every single year something kind of goes wrong with your home where you need to spend either a few $100s or a few $1,000s to fix something. Whether it's your roof, you have foundation issues, you need to update your kitchen, you have mold, whatever the case may be, right? So in essence, like you're cash flow negative on this property, but what's the point? The point is you're banking on appreciation. In 10 years, this home's gonna not be worth $500,000 that you bought it for. It's gonna be worth $1 million. And also you get a lot of tax advantages and tax write-offs being a landlord, right? So break it down again. You're either banking on cash flow or you're banking on appreciation. Now, where can you get appreciation? Markets like New York, Long Island, markets like California, markets like Seattle. Where can you get cash flow? Cash flow is going to be in kind of like the central part of the United States of America, right? So it's going to be like Alabama, places like Wyoming, right? Places where homes are going for $100,000, $200,000, $300,000 max. You get the mortgage for $1,000, $2,000. You're then able to rent it out for $2,500, $2,000, make $500, $1,000 on a monthly basis, and it's worth it for the cash flow purposes. But on the flip side, in 10 years, that $200,000 home is probably only going to be worth like $250,000 max. Compared to in New York, a $500,000 home is going to be worth $1 million, right? So you can't have both, things nowadays as a real estate investor, as a buy and hold investor. You can't have both cash flow and you can't have both appreciation, unfortunately, right? So you kind of got to pick your market, stick to it, and figure out what you think is best for you. And essentially, my best advice to you guys is always just stay in your backyard, right? So if you live on Long Island, stay on Long Island. If you want to try to get cash flowing positive, rent, go upstate. You could go to Pennsylvania, right? Try to just stay as local as humanly possible to your buy and hold investment properties. Buy and hold real estate investors retire. All right, guys. Thank you guys all so much. If you have any other questions on real estate, feel free to comment below. I'd be happy to go over any strategies, tools, and resources to make you guys or your business successful. Thank you all so much.